very powerful company and still got a lot of plus points to it, PayPal.
Currently got a market cap of around 59 billion.
Very, very profitable. I mean, if we look at their free cash flow in 2024, it was around 5.6 billion. And at the same time, they are doing aggressive buyback.
But obviously, why are they not pumping that into research and development and growing their business rather than kind of just buying back their own shares? It's built up a really good brand over the years, but nowadays it's became a really messy company. I'm not sure it's clear where it does want to go. I'd need to see more of the vision and the strategy. So what does it want to be in the next 10 years?
Welcome to the latest episode of the Intelligent Wealth Podcast. And I'm Tony Byrne, the host, and with me, as usual, our two eminent guests, Carl Roberts, who is a fellow director at Minerva Money Management, our fund management business, and Awet Gourmet, who is our head of research, no less. So welcome to today's show, guys.
Hello.
Are you there, Awet?
Yes, I am.
Good. Okay. This podcast is for serious investors who are looking for some help in doing their research and investing in their own businesses, because we don't want you to take this as advice. It's just our opinions on businesses. This week we are doing PayPal, which is always in the news. It's a very good company, of course. We are happy to give you our opinions on it, and we can even offer you a one-page company snapshot to help you with your own research into the company. Remember, shares prices rise and fall. You may not get back the full amount you've invested. So please do your own research, because from my personal experience, whenever I've tried to follow someone else's recommendations, even if they're absolute share guru, I seem to always get it wrong. And there's a good reason for that. You should always invest in shares that suit your own personality, your own timescales, your own attitude to investment risk. We're all different, so don't try to mimic anybody else, and just do your own research and come to your own conclusion. So to kick off with, this is PayPal we're discussing today. There's just one or two things I wanted to mention. We always talk about who's the CEO or the management of the team. They've only had a new CEO called Alex Chris, the double S, since September 2023. And up until that point, they were trying to do a bit of everything, PayPal, and try to have a solution that would solve everything. But of course, card payments is a complex industry with lots of different players for different sections of the process, believe it or not. And when they brought this new CEO in, he's actually simplified it all, and he's focusing on their strengths like core payments, profitability, and operating discipline. So that's worked very well. And they've got a new CFO, Jamie Miller, and he's refreshed the senior team. So the share price has fallen quite a lot in the last few years, down 70%. And some people feel that they're losing their way and that there's a lot of competition. Mm-hmm. But I think it's worth re-looking at, because this is as this discussion evolves, you'll realize it's actually a very, very powerful company, and it's still got a lot of plus points to it. In terms of the share ownership owned by the management team, we usually like companies where the CEO is a visionary founder owner. We don't have that here. There are some exceptions, and PayPal is one of them, but we feel as long as it's run in the same way as a visionary founder owner would run the business, we don't really have a problem with that. So the skin in the game, we call it, the amount of shares owned by the management is only 0.073%. Now, that isn't a lot in terms of percentages, but I wish I had such a small holding in a company like this, because it comes to $49 million. I mean, that's still a lot in my book. So the board and incentives have been improved and modernized to make it in line with them achieving greater number of transactions, for example. The company has bought back a lot of shares in recent years as well, and that usually has a very good effect on the company's share price, aside from its own earnings, because especially when the share price has fallen because they've bought the shares very, very cheaply. So we'll discuss that in more detail as we go on. So at this stage, I'd like to just hand over to someone who's got far more information and statistics than I'll ever have. And that's Carl Roberts, of course, to talk about things like performance figures and competitive advantage, etc. Over to you, Carl.
Yeah, thanks, Tony. So PayPal first went public in around February 2002 through an IPO. But it must have been one of the shortest IPOs in history, because by October the same year, it was taken off and bought by eBay.
Mm-hmm.
So I'm not sure if that is a record for like shortest time listed. But yeah, so it's taken over by eBay in 2002. So it was a private company then. But then they then released it again as its own company and IPO'd it again back in July 2015. The ticker is PYPL, listed on the NASDAQ. It's currently got a market cap of around $59 billion. So when it opened in July 2015, when it relisted back in July 2015, it opened around $40 a share. And by June 2021, it had reached $291 a share, which over that 6-year period is a 39% compound annual growth rate, which is pretty good. So yeah, what drove that price rise over the time? Well, there was a lot of excitement from the spin out of eBay, because at the time, PayPal was ahead of its game. It was the leading digital payment platform. And then it also fell into that period of COVID, where many of us will remember e-commerce just absolutely took off during COVID times, because obviously all the shops were shut, so we had to buy everything online. So during that period, contactless payment was ideal for everyone. I think they doubled their earnings per share. They got around 14 million new accounts. But obviously what always happens with a lot of the time with investment, people get a bit silly when it comes to the valuation metrics. They think this kind of growth is going to last forever. At one stage, I think PayPal was valued over 100 times earnings. However, by June 2022, so as we came out of COVID, the share price fell right back down to $70. And it's been hovering around this figure pretty much ever since. And I think, coming out of COVID, the market kind of completely changed. Competition grew massively. So we've not just got PayPal now, we've got the likes of Apple and Google going into mobile payment systems. We've got Stripe, we've got Shopify. And also during that period coming out of COVID, if you remember, we had really high inflation. So there was a kind of a cost of living crisis, as the media like to call it. And people did stop sort of spending so much on e-commerce. So all of these things kind of hit PayPal's kind of profits, and obviously all their growth targets got reset. Interestingly, with PayPal, a little fun fact is there's a number of leading tech people that used to work for PayPal that have gone on to build really big companies. Elon Musk is one of the famous ones. He worked with PayPal back in the early days before it went off to eBay. But also the founders of YouTube used to work for PayPal or work with PayPal, and also the founders of LinkedIn. So it's interesting that one company has spawned off so many success stories in terms of their employees. I think the thing with PayPal, it's built up a really good brand over the years. But I think nowadays, it's like you said, Tony, at the start, it became a really messy company. Like even today, I still struggle to understand what its kind of core function is. Where is it going in terms of the future? So I think it's relying a lot on its previous history and branding. Don't get me wrong, it's got a number of accounts. I think it's still the leading player in global online payments. I think its share of the global market is around 45% compared to like 17% for Stripe and 15% for Shopify. So it's still ahead of its game in terms of mobile payments. But I just think looking forward, it's very hard to see where PayPal's going, and maybe Awit, you might have some more information on that.
Right. Yeah. Thank you, Carl. And yeah, PayPal has always been a good business, but previously the previous management has neglected the core business model. If you remember, the previous CEO has a vision of creating this super app by the previous management, and that didn't go quite well because they made several mistakes by neglecting their core business. They have made acquisition that didn't work out quite well, and that's why PayPal historically has been mispriced in the last, especially in the last 4 years. The business hasn't gone nowhere. But the game changer is recently they have a new CEO. As Tony mentioned, the new CEO came last in 2023. His focus is to reposition the company to do what's best, right? What they focus on their core businesses, which is the PayPal that we use to make payments and so on. And in the US, they're quite popular in terms of in the UK, it's not very known, but Venmo is quite used in the US. Is a peer-to-peer payment network with around 97 million plus users. So that's basically like you use to transfer money to send it to your friends and family, and you can split the bills and so on. And one of their businesses growing, which is Braintree, which as you mentioned, there is a competition in this space, and the fee is quite small. This is the processing business where you can process payment and so on, and PayPal collect fee. For example, when we pay through Apple Pay, it could be used by it could be processed by Braintree, where PayPal takes a small fee for processing that payment. The fee on this side is quite small. Um, so I think the key thing when we look at PayPal, there's few things that I look for. The company is very, very profitable. And recently if we look at their free cash flow in 2024, it was around 5.6 billion, and the free cash flow margin around 16%. So PayPal is pretty much, they are profitable and cash rich, and they are using that money to buy back their shares. For example, in 2024, they have made a buyback of 6 billion worth of shares, and there is aggressive buyback of 15 billion authorized. That was pretty much going to buy the 22% of the total outstanding shares from PayPal. So the company is really, growing, and at the same time, they are doing aggressive buyback to buy their shares. And I think when we look at PayPal, one thing we always forget is PayPal is still, even though there is a competition, as you mentioned, Carl, and is intensifying, but they still remain dominant. They have around 434 million users and 35 million merchants, and are across 200 markets. So they still dominant. Especially, I think the game changer would be, if they can. I think recently they have a deal with OpenAI. By 2026, PayPal will roll out PayPal payment across AI, in terms of like ChatGPT and so on. So that will be, because remember, what was the biggest obstacle for PayPal in the past was when Apple Pay rolled out, Apple Pay in terms of to pay Apple Pay on a browser. That was a big killer for PayPal business model. But now PayPal is coming back by, if it would be embedded in AI and so on. PayPal would have the capacity to go back again and compete with companies like Apple and so on. So that's the biggest, growth for PayPal. And historically, when you look at PayPal, it's pretty much trading the cheapest historically. When you look at the free cash flow, price to free cash flow is trading at 11 times, and price to earning 13 times. When you look at the discounted cash flow, what you discover is the market is implying no growth for PayPal in the next few years. So, and PayPal management is planning to return 70 to 80% of free cash flow to investors, as we mentioned, via buyback and to investors. And they recently start paying dividends. So there is a great things going for the company, even buying at this rate. For example, as I mentioned, the market is not implying any growth. But when we look at in the last 5 years, the buyback alone compounded annual growth rate has been 5%. So there is a lot of pessimism is priced in PayPal. But I do think PayPal there is a significant margin of safety for PayPal, especially when you look at the payment space is growing at 5%, and that's continued to grow up to 2028. And PayPal is still reinvesting in AI, and you can use Pay USD, which is you can buy stable coin and Bitcoin in PayPal platform. So there is a lot of good things going in this company, but the market still doesn't like it. And I can understand, because there's a pressure in terms of, like, when you look at the take rate, for example, is on down pressure. Though it's trending downward, and I could understand, but buying PayPal at this price, there's a huge margin of safety. I think that's the key thing here.
Yeah. When I was discussing this recently with Carl, he made a very good point. I know this is only one aspect of PayPal's business, and it's not the only aspect, of course, because we've touched on these other companies they own. But when it comes to your shopping experience with your phone and you go to pay,
Yeah.
it is usually a lot easier just to use Apple Pay. PayPal, I find I've got to put in my username, password, and it's just a bit more clunky. Whereas Apple Pay, you just go straight into it and just press a button and it's paid. Having said that, to counter that, I find that with Apple Pay, I'm not able to at the moment to add, I think, any of my company cards. Whereas it's easy to add, much easier, I found, to add them to PayPal. So you can't. It's only one thing, but you can't help thinking, well, why don't they just make it much easier to pay? Then they'll capture more business, because Apple Pay must, in that respect, if you're paying with Apple phone, Apple Pay is probably going to get the vast majority of transactions because of the simplicity and speed of it. What do you think of that, Carl? Because I think you did bring that point up yourself.
Yeah, I think the problem with PayPal, if we're thinking of it as a moat point of view, as in has it got a moat, and is its moat under threat, is heavily reliant on third parties to be able to operate, isn't it? So that goes from phones. So, for example, if Apple don't want PayPal on their phone, tough. PayPal, they've got no way to operate, have they? Same with any website that wants to do kind of shopping. You've got the likes of Shopify now and Stripe and all these different kind of competitors coming to the market. If the e-commerce brand again doesn't want PayPal, PayPal can't operate. So it's relying a lot on third parties to be able to do its business functionality. Personally, I've always found PayPal not the most smoothest experience. I don't know why. I think that fact that it's like an extra username, password. When you go into it, there's quite a lot going on in the app. Whereas, like your Apple Pay, it's just very simple. It just does what it says on the tin. So I think, the stuff that the new CEO is saying makes perfect sense, because I think PayPal did just become too messy. So going back to PayPal's moat, it's not just the fact that there's a lot more competition. So it's under threat from a lot of competition, but it's also under threat from new technology as well, isn't it? Because who's to say, we're going to operate the same way with kind of payments going forward? Obviously now with the blockchain, there could be a whole new way of digital finance. And I know PayPal have tried to go into this area, and they've got their own stable coin, which again is interesting. And, because they've got the brand awareness, that could be a good market for them to kind of move into. But there's that threat as well. And I think the fact out what you were saying, because they're giving so much money back to shareholders and doing share buybacks, that's not always a big positive for me, is because I sort of think with all this competition, all this innovation, why are they not pumping that into research and development and growing a business rather than kind of just buying back their own shares?
Good point. Very good point. What do you think about that, Albert?
Yeah, no, I think that's a good point you made. As I mentioned, like, the previous management has neglected the company, and they have made a lot of acquisition, which didn't create a great synergy in between those businesses. That's why I think investors were fed up with PayPal. But the argument I am making here is PayPal is repositioning it in a new direction, and I think to counter your point, Tony, PayPal has created this system called Fastlane, which is a payment solution that speed up for speed up guest checkout by allowing customers to use saved payment and shipping information without logging into PayPal. which, this is a quite game changing. And then they understand, they are acknowledging that the mistakes they made in the past, and they are working to address the problems they had in the past. Of course, they are investing, as you mentioned. Recently, they had a deal with OpenAI, and they are working on AI agents and so on. But as you mentioned, the difficult part is when you don't control the hardware, like Apple, the big tech companies like Google and Apple, they have the software and the hardware part, which is difficult to compete, where PayPal is only the software player. So that's the biggest problem for PayPal. But the key thing is, I personally think, when you invest in a business, is the management. I think the new management seems to address the problem, and I think that's a good moving for good things that you need from management, to acknowledge what happened in the past, and then once they address the problem, they can be able to solve it. And I think, for me, this is a positive thing for PayPal. Once they address this, they are working toward resolving and re-engineer the company to a new direction. So for me, that's a positive.
So, I mean, Carl's just touched on this. How strong is the moat? That's usually something we really focus on, isn't it?
Yeah.
A great deal. Do you have any more comments about that? It doesn't seem to be as dominant as some of the other companies we've reviewed on this podcast.
Yeah, I mean, the moat is still there. As I mentioned earlier, PayPal pretty much process around 400. They have 434 million users and 35 million merchants. Is spread across 200 markets. So they are pretty much dominant. I think the key problem they had in the past is how they didn't know how to monetize the network, the network they have. But now the new management, they understand, they are focusing on leveraging what they already have. And if you think about it as well, PayPal currently process nearly 1/3 of all e-commerce payment outside of Amazon. So they are still dominant. But of course, as you said, the payment space has been very competitive, and the competition has created a lot of price pressure, price war, and the take rate has been compressing in the last few years, because there are more players now. They are competing with each other to be cheaper, so that didn't help PayPal. But considering the valuation and they buying back, and how much are they returning to investors, considering the market is pretty much trading at all-time high, PayPal provide good margin of safety. That's the argument I am making here.
You haven't mentioned. You normally talk about buy now, pay later, Awet, but they've got a few growth areas, haven't they? This thing they call agentic commerce. AI agents driving purchases across the network. PayPal, well, I think you have mentioned, the stable coins and so on. So they do have a few areas they could really grow from here. Are you pretty confident about that?
Yeah, I mean, if you look at the buy now, pay later market, which is PayPal pretty much dominate that market. Last time I checked, it was I believe it was last year. PayPal had like around 70% market share. So PayPal is still a critical player, but I do think PayPal is a great business, but it just doesn't know how to leverage what they already have. I think that's the problem. And if you are a good business but you don't know how to use whatever ecosystem you have, that's not a good sign historically. But the argument is the new management, they are planning to monetize what the company already have. And if you can return back to investors around 6 billion in share buyback, or if you can use that money to invest, I think you pretty much have a good business.
Yeah, I mean, but they've still got, I know this maybe isn't a huge amount in terms of the capitalization, but they've still got $6.8 billion in debt, although it's well covered. The interest is very well covered, 14 times.
Yeah.
You kind of wondering why you're buying back your shares and not paying off your debt first.
Well, it's always I think it's like in terms of like the management knows the best the company. The share price has been from all time highs down almost 70%, and management probably think is this the best way to allocate capital return money to shareholders via buyback, because the company doesn't need the cash. Currently, they can generate 6 billion in free cash flow. If they can generate that, the debt is pretty much could be paid within a year or two. So that's not a big problem for management to see in the
True.
short
Yeah.
term. So the
And of
key
course,
thing
we've
is,
always liked companies that do share buybacks because that gives you additional growth beyond their earnings, doesn't it? I think you just mentioned a figure. Was it 6% a year? The return just from the share buybacks alone. And of course, the shareholders are getting the money in the most tax efficient manner. They're getting capital gain rather than or capital loss, but they're getting capital back that's not subject to income tax. So we quite like that. If they're going to do that at all, share buybacks are going to increase the share price, isn't it?
yeah, that's why I think the shareholders yield is around 10%, which is we like to see. And I think that's
Yeah.
pretty much a returning good amount of money to investors. But the market doesn't believe PayPal will emerge from here stronger. And I
No.
think it's a very contrarian bet that you have
Yeah.
to make. Yeah.
I get the impression, Carl, you're less, you're more skeptical. You don't feel it. I get the impression you don't feel it's got the prospects to grow. You don't seem to be as bullish as Awet, dare I say. Put your neck on the line there.
I think Howard hit the nail on the head by saying it's a contrarian bet, isn't it? Because the market is generally efficient most of the time.
Mm.
So its share price is its share price for a reason. And if you
Yes.
think, if you've held PayPal since 2015, you've had 10 years of nothing. It's pretty much still at the same share price, albeit it's
Yes.
gone up loads and come down loads, but it's pretty much at the same share price as it started. So you think of the opportunity cost of holding
Yes.
PayPal for the last
Huge.
10 years, you'd be pretty frustrated with that stock. So you are taking a massive gamble against the market currently to on this new CEO and for them basically turning this around and recovering. Now, don't get me wrong, it's a strong business on paper. Obviously, good financials, good brands, good brand history. So it's got the potential there to be a leader in whatever way it wants to go. The problem is, I'm not sure it's clear, or I can't see it's clear where it does want to go. I'd need to see more of the vision and the strategy to what does it want to be in the next 10 years? What is PayPal going to be? Because at the moment it's lots of kind of little things. So yeah, I think that's where it is for me. It's like how it said, it's a contrarian bet at this stage.
Yeah, I think that.
I get the impression it's a fairly safe bet. It's got like Awet said, it's got a very large margin of safety.
It's not
But
safe
is that
though
what we want?
if you've heard it the last 10 years, is it? Because you've got to figure opportunity cost.
It's
And
huge.
just because it's at a low share price today, if the general market is falling, PayPal isn't going to stand still. It's going to fall with the rest of the market. So yes, there's a safety and margin in terms of it's not lofty valuations and you could come crashing down
Yeah,
quite significantly, but it's still going to fall with everything else, isn't it? If the market falls.
sure.
Um, yeah, I think if the market falls, PayPal probably wouldn't fall as much as the market, because I think the worst is already priced in. From here is like if you the thing is how I see PayPal is, if you are wrong, you don't lose much, but if you're right, the upside is huge. Because if you think about it, when historically the business has been, especially for investors in the last 5 years, hasn't been great investment. But the new management, if they can pull, the things what they have done, they learn from their mistakes, and they come with a fresh mind to reposition the business into a new direction, which I hope they will do. I think that they will take the company into a new direction, and shareholders would be paid off quite well. Because considering that the company doesn't really need cash from, because the biggest risk is, how business fail and so on is, taking excessive debt. PayPal they don't have that problem. They are self-sufficient. They don't need the cash. They, in fact, are returning cash to shareholders, but it's not reflected on the share price yet. But if they could reposition the company in the future, I think the payoff would be good for investors. That's all I think we are betting here.
Mm.
Mhm.
Of course, we're not a betting firm, are we? But I know what you mean. It's all based on probabilities, really, isn't it? And that's all you can do, really. So I I think we've probably covered everything we can on PayPal today, unless you got any closing comments, gentlemen.
I always say, like, the key thing is if you cover your downside or you protect your downside, which is, I think PayPal pretty much protected downside. The upside, it will take care of itself. So that's the key thing. I think PayPal provide the good margin of safety.
I could be listening to Warren Buffett. You're that wise. You got a very wise head on young shoulders, like a wise owl, dare I say. Anyway, so thanks everyone for attending today and listening to our comments on PayPal. We'll cover everything in our show notes, including the one-page company snapshot. If you're listening to us on Apple Podcasts, please do give us a review and like us, etc., because that will help us go up the rankings and attract good, high-quality guests. And last thing, just to say, thanks very much for your attendance today, guys. You're awesome as usual. And all I had to do was ask a few questions. I got the easy role. So all I can say is have a great day to you and also to all of our listeners. So we'll welcome you back next time when we're going to discuss, what did we agree?
Adobe.
Adobe. Sorry, Adobe. Yeah. That name just escaped me for a moment. So that'll be another interesting episode. So thanks for your time today and have a great day.
Thank you for joining us today. Please help us spread the word by sharing this podcast with your family and friends. And don't forget to subscribe.